For most Canadians, the deadline to file your taxes is fast approaching, April 30th. And if you're getting ready to file, there are important things to be aware of, including an extension to reporting capital gains, as well as possible CRA and tax software glitches this year, just to make it fun. Nicole Ewing, Principal Wealth Planning Office at TD Wealth, joins us now. Okay, Nicole, let's run through the list. And the first one that I mentioned, and of course I got this from you, was the filing extension for capital dispositions.
Right. So regular deadline is April 30th for individuals, June 15th, 16th this year, because that's on a Sunday for self-employed individuals. But if you had a capital disposition this year, you may have had some delays in getting that information. And so the CRA, in an acknowledgement that there was some need for administrative changes and software updates that was a little bit later than usual, that has been extended to June 2nd. But I caution many filers, many accountants simply don't have the bandwidth to extend beyond the April 30th date. They have other deadlines to meet. So April 30th really should be considered the deadline to file and to pay your taxes.
I've talked to my accountant. Yes, they are very busy right now. And on that, they also mentioned to me this next piece you have here about submitting slips on the CRA's online platforms.
Yes, and I experienced this myself, and this was part of, again, a new certification process for the slips that your financial institutions and employers would be sending to CRA. Some hiccups this year and some of those slips not appearing. You would have received paper copies of these from your employers and your financial institutions. So you are responsible for having all of that information entered into your filings, so your tax slips. You are responsible for ensuring that information is complete. So do a double check, make sure that you have the slips you're expecting to have. Ultimately, there is no extension because of these delays. So you are still required to have that information in by the 30th.
The thing you keep saying over and over is you are responsible, and that's the theme for all of this, no matter what. You say another one here for people, again, the DIYers right now who are filing right now, to be vigilant, tax filing software inputs and credits and deductions. Check, double check, triple check.
Truly, because there are some default things that happen in these softwares that you might not be expecting. And so if you see, for example, a large return that you weren't expecting or a credit that's much larger than you were expecting, look the gift horse in the mouth. Question it. Don't just be happy and wander away and think that you actually do have an entitlement to that additional refund. Make sure that you understand what those numbers are. There is situations where people have been reassessed because the default in the software gave them a result, gave them additional income that they were not entitled to. They are now required to repay that, potentially with income, with interest and penalties as well. So you ultimately are responsible for ensuring the accuracy of the information. Don't rely on the tax planning software defaults.
Ensuring the accuracy is your responsibility. And also, this is the lawyer in you. Be prepared to defend your filing position.
Truly, this is one that can become more and more difficult the further away you are from certain activities. So if you have purchased an asset, make sure that you're holding onto those receipts so that in the future you're able to defend what your tax base was. Make sure that you have receipts to be able to justify any of the expenses that you're claiming. Don't simply rely on being able to pull information off your financial institution systems. Those are not necessarily going to be accurate reflections of what your cost base is. So again, you are responsible for ensuring that you have a defensible position when you file your returns and you're able to justify that position that you've taken.
This is my favorite tax tip, and I don't think tax planning shouldn't occur in April. Tax planning should occur in April for the next multiple years, not right now. So what should people be thinking about for the future?
100%. There are a lot of different things that you can do now to put yourself in a much better position next year. So again, we know about using our tax efficient accounts. So your RRSPs, your TFSAs, your FHSAs, your RESPs, make sure that you're maximizing those for tax efficiency. But also think about things like the disability tax credit. This is a widely underused tax credit that might be available to you. So start going through the steps now to see if you can qualify for that so that you're in that position to be able to claim that credit for next year. Medical expenses, for example, those are on a 12-month rolling claim that you're able to make make, so you don't necessarily need to use the calendar year. So looking at those, maybe bundling them to maximize the availability of your credit, start thinking about your charitable gifting for the year in a more holistic way, so that, again, you're able to maximize the value of the credits that you're getting for the gifts that you're making. So making your decisions now to be, next April in a better position than you are perhaps this April.